And we are, as a government, the Malcolm Turnbull team is aware of it, and it is something that we do need to do something about. But I don't think going in with a sledgehammer or a threat of a sledgehammer is the answer, because all that does is, in effect, destroy industry. We saw that with the carbon tax. We saw that with the super profits tax. We saw that with the beef industry. Labor goes in with a sledgehammer and inadvertently or advertently destroys industry, destroys markets. That is not what we do, and that is not healthy for Australian industry. We need to, yes, protect the consumer, protect the investor, and give them, reasonable assurances that they will be able to invest effectively without being gouged or disadvantaged. We need to make sure the watchdogs have a strong bite, not just a bark. That's what we are going to do. We are going to make sure that the watchdogs actually have the capability and the capacity to deal with it and to open up markets, open them up for competition. That's what's going to stimulate growth, jobs and affordable investment and finance.
Well, that's what I'd like to see Turnbull doing more of, saying we've got
And he will.
we've got the ACCC and we've got APRA that can take action to bring competition back into the banking sector, but we don't see any movement down that way at the moment. Another sleeper and common question I get from our members, they don't like super. They know from the intergeneration report that even if you do super all your life to 2050, you'll live for 5 years on your super, then you'll be back on the pension. So they know it doesn't work. What they do know is that property works. Can they use their super to pay down their mortgage? And wouldn't Australia be a more stable country if it was less dependent on overseas funds to fund the mortgage market, if we could use our super to fund the mortgage market? Is there any movement in the Liberals for this end?
Well, at this stage, we need to, progressively develop that detail. I think we should explore all these opportunities. I consider myself very progressive when it comes to economic and fiscal policy, because I think we need to look at everything. We need to encourage people to invest. And I look at super the way I look at any business or investment approach. You need to have that balanced and broad application. If you just rely on superannuation, that may not be enough. If you just, well, there you go. I do this in business and I do it in practice. I look at various strategies, both investment and other, to actually build up, that wealth, that financial portfolio, whether it be in shares, whether it be in property, whether it be in superannuation. I think you've got to have a broad-based approach to it, but you've got to allow people, you've got to have the flexibility so that they can do that.
But
my father always, no, I know, but this is something that we need to look at in the future. Now, what that means in terms of superannuation, I know that self-funded retirees and self-funded superannuation is a different story, and then you've got those who go into investment funds. We need to look at these and look at ways that we can open up opportunities for broader investment, whether that be through other means or direct means in terms of your personal income. I think it's important that we allow people to invest in their future, to actually have a broad portfolio that is weatherproof, so to speak. Because everything goes in cycles. Property goes in cycles.
Yes.
The market goes in cycles, as in the investment market, whether it be blue chip stock or others. But most investments go into cycles. So the ability to actually move and adjust your investments, I think, is an important thing.
One of the big things about the Property Club is that we educate our members, and one of the faults I found with superannuation in your own self-managed super fund is if you put a property in there, it's locked in, you can't access the wealth. You've actually got to sell the whole property to access the wealth. So you might have bought it for 400,000, it's now worth 800,000, but you can't access that 400,000. The law says you've got to sell the whole property and then see someone else own it. So when it doubles to 1.6 million, you don't own it. And all you've got is that 400,000, which eventually you're going to spend, and you're going to go back on the pension.
So you're suggesting using, you know, the equity, so
Yes.
accumulate equity to reinvest. Now, are you
Or live
suggesting
on.
that reinvest into?
So I'm looking at low doc loans in retirement is a good, safe investment.
Mhm.
If you borrow 10% of the annual increase, 90% still there. If you borrow up to 60% of the loan portfolio,
Mhm.
that's a very safe lend. But it would probably give you $100,000 to live on very well, spend, create jobs in the community and have a good lifestyle, and be totally free of the pension, because that property will continue to rise and you'll continue to be ineligible for a pension. But that's not possible at the moment. And I've been with the government now for 7 years trying to get an answer on why can't we have a low doc loan to self-funded retirees who are relying on safe property. I can't give a good answer to it.
Okay, well, it's a very interesting question. It's certainly one I'd like to explore, because that sounds like the type of structure we should be looking at. Now, I don't have an answer for you right now. I think it's something that we should absolutely look at, because, and this is, you know, in order to be economically progressive, we need to look at those sorts of ideas. We need to explore them. As I said, don't have an answer today, but I think it's something worth exploring.
It's got to be an answer to the budget deficit, because the fewer people
Potentially.
on the dole, or the fewer people on pensions, it's going to be better for the budget deficit and the
And I see the benefit of it, because you are also talking about absolutely utilising the equity in a fixed property, so a fixed asset, to be able to once again fund your lifestyle, fund your retirement, but the asset remains. So, you know, the risk in terms of risk against collateral, well, it seems to sort of be a reasonable idea. Why wouldn't we explore it?
The first answer I had from the previous treasurer was, why don't you just sell a part of the property, as if you could take the front door down to the supermarket and put the front door through and get your groceries. And of course you can't do that.
No.
They're thinking in terms of shares, and of course if you've got a lot of BHP shares, you can sell enough to live on this year.
You can sell a portion or a parcel, but it's very difficult unless, and also there's an inherent risk involved in that if you're talking about a third party as opposed to a member of your family, or but even then, you know, there's always challenges in part ownership.
Yeah, you betcha. Can't recommend it.
Unless you're selling that proportion to your children, so that they can gain part of an asset, but otherwise there's certain inherent risks to that, because you're talking about, you know, you're right, you can't then break down a property into parcels.
And then
It's
the kids
all
think
or
they're in
nothing
your
in
house.
terms of it exists, but
Yeah.
is there a structure that we can use fiscally to actually allow for that reinvestment?
I can't find it, but if you can,
Okay.
I'd be very, very
No,
grateful.
I'd be happy to look into it, because, as I said, this forms part of my professional background as well, and that's what I want to take into government. That sense of, I'm a small business operator. I also come from a large corporate. I have a military background. I was an infantry officer in the Army Reserve, and you know, I've dealt with, you know, banking, finance, and investments. So this is something that I'd like to take into, you know, policy determination and delivery in government.
Well, I can promise my members in Moreton that I'll hound you. When you're in office, and I'll hound you.
And I hope you do. I hope you do, because I think that's the reason we're there.
Yeah.
I
I really appreciate your time.
No, absolutely, Kevin. Thank you.
Monsieur for Moreton, and appreciate your time. Thank you very much.
Thank you for the opportunity.
Thank you.
Thank you.
All right, Kevin, I've got to go.